All right. Hola. Hello. Happy Thursday. Oh, there we go. I see some people filing in now. All right. Like I said, happy Thursday. Let's check in with our markets. My first observation today is the IWM has just been really weak. Look at that on the daily. It can't get out of its own way. However, I'll talk a little bit about there are some sectors out there in the small cap land that are doing well. I was on Trader TV live this morning at 8:45 Eastern, and I had a slide deck that I prepared for them. Oops. I'll pull it up a little later. What else was I looking at? Oh, yes, I was looking at some of the Bitcoin. It's pulled back a little bit, not much. But anyway, hello, everybody. Sorry for the chest. I've had a bad cold all week. I might have to put on mute and cough sometimes. I'm actually amazed that I made it through 10 minutes of live Trader TV this morning. Anyway, here we are. Yeah, my first observation market wise. And by the way, of course, if anybody has a need, a question for the software, that's why we're here. This is supposed to be a support session for the product, but that doesn't always occur. So sometimes we talk about trading in the markets, and wherever we go, we go. The S&P, on the other hand, is like if you look at the daily over here, it's really nothing to be bearish about on that. It's not time to be bearish until we see something like this. Or not bearish, but cautious. And then the strong one of the day is the Nasdaq. Actually, no, it's not. It's actually the S&P is a little bit stronger than the Nasdaq, but the IWM is the worst. So small caps are under a little pressure today. More importantly, they're starting to enter the no man's zone here of under the 20-day moving average, with this looming way down here. So the IWM is going to need a stick save right around this area right here. Maybe this is the beginning of it. Who knows? I've done a couple things this morning. It's kind of related to that presentation I did, which I'll get into in a second here for Trader TV. I bought some BBAI at the close yesterday, right down here, because it was pulling back and tickling the 10-day moving average after 4 days of just big crash back down. But actually got close to stopped out, but that blue line is probably a live stop for me right now. Let me just go ahead and get into it since there's no questions, and feel free to ask questions as I start. But what I'm going to show you is what I did this morning at Trader TV. Let's see if I can present. Yeah. So the silly season. We are entering the silly season, and I've been trading 25 years, and every time we get around Christmas, the holiday season here, it's notable that there's a few small cap sectors that they just turn into absolute darlings. And it's not always the biggest names, but you can find some second and third tier names too that might also participate. And what I gave was three sectors, and I had taken a stand in one of the stocks in all three of these sectors. And I'm saying these are three sectors to keep an eye on going into the continuation of silly season here. And as you can see, these stocks are off the charts, and they're low priced, many times low float. But AI sector, AI, CX, GF, AI, anything with AI at the end is pretty much a guarantee you're going to be in that sector. But the lesson is, you don't come in here trading these things because it's silly season and you buy in up here. You've got to have a plan of where to buy, and I've got a contrarian plan that I use, and it's basically waiting for the 10 SMA pullback. In all of these charts here, respectively, that's what we got yesterday. So this was yesterday's data. So I am long BBAI, but a little underwater. We'll get back to that. What's the second sector? Second sector is going to be the quant. And probably my best trade of the morning was this ARQQ. I bought it yesterday. You see how it pulled back and touched that 10 SMA? This is one of the quant stocks. These quant computing stocks are really hot. I don't think you should lose track of any of them. And these are just 4 of them. So I will say I encourage you guys to get on Google or use, even if you can, the Trade Ideas competitors. It's not always a great list because it mixes up a lot of other things. But if you use the internet, or if you have ChatGPT, you can probably get even better reply. Who are the stocks in XYZ sector? AI, quantum, what have you. So ARQQ, let me talk about that for a second, because I told you I bought it yesterday and I came in long today, and it was one of my early winners. And it was a perfect example of how I like to position yesterday, all right? Take the risk home because it feels like it's safe. Obviously my out would have been right there. If it happened on the open, I'd be gone. But it didn't. It took off. And so I just started laddering out. Those are kind of my sales right there. I'm all the way out now. I just wanted to take profits on that one. So that one worked out really well. BBAI, I'll get back to that. Still kind of out of the money. And you can see I've drawn my line in the sand there. It's a negative trade, but so be it. It's what it is. It's about risk management. So we'll go back to the slideshow and the quant sector. Go for it, you guys. Yeah, Qubits too. I don't have that one on there. I think QSI is another good one. So like AI, all right, now we've got the Q stocks. Most of these stocks are going to have the letter Q in them, but you guys have an internet connection. Get out there and build a watch list and see what you can find. All right, hang on a second here. All right. So that's sector number 2. That's ARQQ. I'm out. That's how I played that one. Third sector, you guys have heard me talk about this one for months now, right? Because this has been the darling sector coming into today. SMR, Oklo, Nano, and then, of course, BWXT. There's other ones, VST, bigger players. But the silly season tends to attract the smaller cap names. That's why I've, talked about these. So what I did yesterday in SMR was the same thing. I was leaning, here's SMR right here. I was leaning on that 50-day moving average. So I bought bought it right at there. And I'm going to get into the nuance of, how do you know when to buy it? I'll get to that. But the point being is I grabbed some SMR and let's see here. I'll show you what happened. I was kind of in a scalping mood today. So this was the most important part, and I have a slide for it too. But you see, that's where my price alert roughly went off. But then I watched it, and it doesn't mean just because your price alert goes off doesn't mean. Actually, hold on. Let me just adjust that. It was actually lower. It was down here. Okay, so the price alert went off. There we go. That's much better. And then I was watching, and then this was my signal candle right there to buy. You've heard me talk about the signal candle. Look at all that selling. The 10 SMA just crushes the highs of each candle. Then it breaks back up, kind of gathers itself, and then it becomes supportive. That's all I need to see. This is the intraday 15-minute chart makeup of what I'm looking at. And what I had said online was on the Trader TV was, just because the price alert goes off doesn't mean you just cannonball into the deep end of the pool and take your position. No, I took a half position, and then I kind of just waited. And then as soon as it broke above highs, I added full position right there. Now, coming into today, where is today? Pretty much right here. Okay. There we go. Right there's okay. So coming into today, I just kind of scalped out all the way through up here. Didn't take much. I just wanted to take a little profits on that one and make it work. Right, back to the slideshow. So in this particular case, we're using the 50-day because remember, these were the darlings a couple months ago, but look what happened. They all broke down through their moving averages. Hang on a second. And so when you see a stock break back down to these moving averages, I'm no longer interested here. I'm no longer interested here. No longer interested here if they're breaking down. But once they come to this blue 50-day moving average, that's a real line in the sand for many stocks. It's the do or die point for strong stocks. If they're going to stay healthy, they're going to need to stay above that 50. But stocks that get ahead of themselves, they will pull back and test it. So SMR, we talked about that. Okay, and here's what I just kind of showed you guys yesterday. But the 10 SMA is my daily. It gives me the alert as to when I should pull it up and look at it. But then I'm watching the 15 minutes 10 SMA. Actually, I didn't have that right. 15-minute 10 SMA in green. And then it popped above, and then it held in the hand, like a bird in the hand, I call it. And then I take half right there. Ideally, what I want to do is, ideally I want to just get up there and wait till it breaks above the declining 5. But in this case, I figured, and this is why I traded it the way I did today. I figured that was really the spot for profit that I just felt was easy, but beyond that is unknown. So that's how I was playing that stock chart today. And then in a perfect world, like ARQQ, when I bought it yesterday, this was my buy yesterday, it quickly moved through the 5-day moving average in blue. So it was like an entry and then a double right there. And that was my full position. So that's how I kind of approach that stuff. See if you can find some more names with your own research. Makes sense. So I got to I'm very happy that I've been trading the silly season very well. These quant stocks and these AI stocks have been pretty good to me. Mostly the quant stocks. These have been off the charts. But I think you just have to pay attention to make sure that you've got the right entry. By that, I mean you're not chasing green candle. This is looking interesting as I speak here. So here's what I'm going to do. Why does it look interesting? Because it's creating kind of that wedge like it did back here. Boom. So I'm going to keep an eye on this one. What I might do here is I might just put an alert above the 5-day moving average. I might do that right there. If this thing wants to get back going, nope, it doesn't want to adjust for me. There we go. I might keep an eye on that because it actually did touch right there. It came back and touched the 10. Now it's just kind of meandering around. It could be a day early, but the point in setting price alerts is you're giving yourself a future opportunity, for a trade in real time that you need. Because sometimes you're not paying attention and you don't get you don't get the information you need at the moment you need it. Oh, there's ARQQ. Yeah, it's already pulled back. All right. Hello, Charlie. Are you going to be presenting your slides anywhere? No, if you missed it, I just closed that out. I was on Trader TV live this morning, the YouTube channel. They're good guys up in Toronto. And either myself or Andy, we're going to start doing every other Thursday with Trader TV live at 8:45 p.m. 8:45 a.m. Eastern. So I was up early here on the West Coast to be ready to go with lights and all that at 5:45 a.m. and just gave them 10 minutes of my thoughts of what I just shared with you guys. So that was my slide presentation for Trader TV. Anyway, what would you guys like to talk about? Looks like we've got a normal attendee list now. I mean, anybody can chime in. I don't mind looking at charts for you. If you want to see what you want to see, just tell me if you're in it or not, or it always helps to know what you're doing in the chart when I look at it, because that can change the answer. Charlie, you can go to today's live and just scroll back. It's like 15 minutes after the open. You'll see who's talking to you here and where. But yeah, we're going to start doing some more segments with them. And then yesterday, you guys had the privilege of our CEO, Dan, coming in and giving you his perspective. Dan is an outside-the-box thinker. He's the one who's responsible for taking the product to the next steps each time. And I learned trading from him back in the day, so he's been around forever. Sure. Keen, how does Cadle look? C8DL. The first day was just, it's a wild train ride, gapping up like that and then back down. A therapeutic stock, they can move. But all I have to go on here is what's happening at the moment. And as long as it's below this 10 SMA, then it's under pressure. If it can stay above this line right here, then I'd feel better about it. So there's not a lot of data to go through. We've got 1, 2 candles, and there's a lot of volatility in there. So we don't really have much to work with here other than if it wants to go back to highs, it needs to use that line as support right there. Yeah, Flip. I mean, great point, because I want to actually show you something. This is some crypto charts, and I don't own Bitcoin, but I own XRP. I've been stacking XRP for 3 years, and I'm pounding the table on this. Let me show you why I use the 10 SMA. Whether it's stocks or charts, it is a gauge, I believe, of the human character of buy, sell, greed, and fear. You've got excitement, euphoria, and then you've got, oh my God, fear, it's going down. I better lock in profits, but then it's not going anywhere. As soon as it gets to the 10 SMA, it kicks it higher. And then these people want to take profits. And then these other people go, oh my God, I got to lock in my profits. And then it catches the 10 SMA. So it broke here, and that's okay. But your question was, do I use technical analysis? And I do. What I did, I actually showed a friend of mine because he was tripping out. And I pulled up a Fibonacci. Is it this one? Where's my fib? Fib. Okay. So I went, oh shoot, I already blew that. Let me delete that. Let's try this again. Fib. And I went up there. And I said, okay, there is the fib. And we were pulling back, and I said, ooh, look at this 38%. Well, a good healthy pullback is a 38% fib. And for the most part, look at that. That's the level it held. So to answer your question, my strategies do work well for crypto as well. It's just I'm playing the mentality of the herd, the people. Hang on a second. So yes, look, there's it doesn't matter what you're trading. You're trading the herd mentality, footprints in the sand. It's just a different instrument. If somebody has experience with stocks, engineering, and programming, would you go about working with a company like yours? Experience with stocks, engineering, or programming. How would you go about working with a company like yours? Um, you probably have an aptitude, for figuring things out and certain things. I'm a visual person. I am not a numbers person. Michael Noss was a quant trader and numbers, math, math, math. I don't need to see the math. I need to see a visual. If you haven't figured that out by now, that's kind of what I use is just the indicators to try and line up, what's going on. Cute. So regardless, Charles, of how you approach trading or our software or anything, you can't be in a hurry. You've got to take it slow. And that's one of the reasons we do these daily sessions. There's no one right or wrong way to approach trading. I'll tell you that. You've just got to figure out what time frame you like, what type of trader you are. Are you analytical or are you visual like me? And you've got to, I would definitely use our simulator to simulate, because you're new, you said, I believe. If somebody has experience, yeah. I don't know what your trading experience is, but you always want to start simulating first just to get an idea, like a driving range or for a golfer. You don't just tee it up and start hitting it right away when it counts. Get to the range first and make some shots, practice. How do you provide value to a company? How do you provide value to a company like Trade Ideas at this moment? I don't understand. How do you provide value to a company like Trade Ideas at this moment? You mean you're trying to figure out what stock to trade and you don't know what to trade? I'm not really sure. Someone has experience with stocks, engineering, and programming. How would you go about working with a company like yours? Oh, I see. You're with another company, like more development or marketing. Like is more development. I'm going to give you my our email, Charlie, and then send a informative idea of what you're talking about, and what we can do is forward it to the right person. We've got many different biz dev departments or other ideas. I'm just thinking that might be a better way. All right, back to that CADL. It's trying. It's hanging in there. It's holding up. Okay, good, Charlie. I'm glad I finally figured it out. You were coming from a company perspective, not an individual trader perspective. Got it. All right, Flip. Good. I'm glad that makes sense. It doesn't matter what it is. You're just trading human emotions as a herd mentality. What I am in, let's take a look at what I am. We haven't talked about that yet. I've been long DJT for a while, and I'm not getting out really because this is what I call the bird in the hand setup. Why do I call it the bird in the hand setup? And it's usually a good one. Well, this is all wishy-wash down here. We don't know what's going on, but all of a sudden we started to pick up a base. Okay, we moved high, we broke through the moving averages, and now we've just been skidding sideways. Sideways is extremely bullish. It's much better than pulling back. So you get that sideways action, just skipping along, and all of a sudden, the moving averages start to come up and force the issue. And I call this the bird in the hand. It's just ready to take flight. I'm not getting out of this. Um, there's no reason to. I would kick myself for getting out just because it's doing something right here that's, yeah, whatever. This is a stock that I want to see go all day, and I want to see how it closes. So in relation to this, I also have, similar, I've got Rumble Media, which is just like, kind of like DJT, a different path now for media. If you haven't seen, traditional TV media is falling flat on their face because nobody believes them anymore. And they're looking to go to new places. So there's a fundamental story, a catalyst. Great, but does the chart confirm my story? Yeah, it does. It does. Rumble is confirming my story. There's something going on here. So, and then Kodak. I've talked about Kodak before. I've been in and out of Kodak. Let's see what it looks like. Yeah, it's not, it gave away. It popped up and then pulled back. I don't like that, but first impressions are I'm not getting out here. Look at how the 5-day moving average was a pivot. I think what's happening here is stocks like to come back and return visit and just knock on the door and test that pivot. And by the end of the day, hopefully I'll see this hold, this 5-day moving average hold. Stock. Well, okay, Cedric, that's a tough call because what you're saying is you want us to give you an idea of breaking stocks out before anyone else. That's really hard because you have this balance of, well, I can go down to the minute schedule and start trying to see things first because I'm using a minute time frame. But then when you do that, you're just asking for more noise. So sometimes you're going to get a lot of false breakouts. And our fear is that, just because something spiked in 1 minute with a little bit of volume, it's going to follow through. That's not always ever the case. There are some things to consider. Let's see, that you can do in the filtering to maybe find some better setups. Break out stocks before anyone else. One of the filters you can use, Benny, but we'll go through a couple. Maybe you've got a stock that's been doing very well, position and range, okay, over the last 10 days. Okay, what does that mean? Position, sorry. Yeah, position in 10-day range. So if I take a filter and use this, 0 equals the 10-day low and 100 equals the 10-day high. So that's one way we could say, well, maybe a 10-day, maybe a 5-day range, right? But we can also do, let's see, I'll just add that filter. And then we can also do range. What does range mean? Let's do 60-minute range percent. So I'm going to show you two filters here. So the first one, we're looking at the big picture, 5 days. 5 days, 0 would be a low of 5 days. What if we said minimum, or I'm sorry, not minimum. Yeah, we'll do minimum 90%, maximum, we'll do no maximum. We do 95. So we're very, very close to the top of a 5-day range. Now we want to zoom into the 60-minute. What's happening in the last 60 minutes? What this means is the size of the range. How much is that range compressed? Well, we could say maybe that range is compressed. It's doing no more than a 5% range from high to low over the last 60 minutes. And then what we could do is add something like new Uh, try 5 minute. Actually, it needs to be a new high. That's right. It needs to be a new high. Okay, so we could ask that. Kind of confusing myself. I'm going to start over on a filter that I don't already have. It's a tough order, Cedric, because there's many different ways in which a stock can set up before it breaks out. What I can say is, yeah, you're smart to know that you don't want to be chasing stocks. We just need to know kind of what the conditions were before a stock breaks out, and in using those ranges, like we could even go longer, like 120-minute range, I believe. Yeah. And say, yeah, for the last 2 hours, it's been very tight range, no more than 5%. And so when you say breakout, that means it's breaking out from some sort of consolidation. So that's the way in which I would try, to use consolidation. The other way is if you start to see scans that you like in real time. Let's see. Okay, so let's say this is a stock I'm stalking. I didn't find it on a scan necessarily, Cedric, but this is a strong stock. And what it's doing is this was a washout and then a reversal, very strong. But now look at what we've got. We've got ourselves a little painting in the corner, right? So have you ever considered right-clicking and create price alert? What that does is it turns a simple chart into an early breakout alert. So it's kind of a 1-2 punch, Cedric. So we could say, you know what? I'm thinking if it gets back above that blue line, I might be early to something. And as a bonus, you heard me talking about the tight range on the daily. We can do this as well, Cedric. Tight ranges on the daily, I believe. Let's see. We'll go back to search for range. And that would be a 5-day range, wouldn't it? 5-day range. Add filter. I'm just curious. Let's look here. We got. I've lost my cursor. I'm going to turn that off. That would be a 5-day range of 33, 34 to 36, 39. So you kind of look at that and you go, well, that's a pretty tight range. And so you would put a maximum of, say, 8% or whatever that is, 5%. The tighter the range, the more the breakout. So those are just some off the mind ideas. I don't really have any off the shelf scans that I can just hand you. I'll tell you this, Cedric, if you have some charts that you're looking at and you say, I like this chart. And if you send us a picture of it, to the email address I showed above, we can take some time to maybe try to back ourselves into the beginnings of a scan to help you. But, that can be a secondary step, from what I just showed you. What happened to Mike Noss? He'd been here for 10 years and I loved working with Michael, but there was some internal shuffling going on. He put out a video discussing it, very, very nice. And I'm going to miss him because we worked very well together. So he's at his brand, which he's always had, because technically he was just kind of a side contractor for us. And so his contract wasn't renewed, as he mentions in his video. No news there. He's going to pursue his angle of trading and education at Stats Edge Trading. Can you describe accumulation on a stock before a big move? What does it look like to you visually? It looks like, I'll show you. We'll go back to crypto. It looks like this visually. And remember I said, pull back, consolidate. You're welcome, Cedric. Price action that moves sideways is the strongest of consolidation versus price that pulls back in price. So Jamie actually has a new trading strategy that he was just kicking ass at, and he's off doing that. He may be back someday, so I'm calling Jamie more of a sabbatical. How's that? Okay, so back to accumulation. Um, we don't accumulate on green bars. That's FOMO. That's chasing, but we accumulate at the 10 SMA. Kind of what I've been preaching all day. So that's why I love seeing stocks, and that's what I was looking at, a second ago in DJT. I would call that accumulation. You see the volume back and forth, and it's slowly starting to tighten up like a coiled spring. That's really the best visual representation I think I could give of accumulation, where you just see a level being held on a strong stock. And it's basically, I know a lot of people in crypto that got into XRP, and my neighbor actually, he was listening to what I said, and I said, he goes, "Oh, it's pulling back. What's going on?" I said, "Well, in my opinion, it's a chance to find a level that makes sense and add to your position, accumulate more." Unless I'm botching the term accumulation of a stock that is accumulating before it goes. If that's what you mean, I can try and qualify that. Accumulating a stock that hasn't gone yet. There's a way of looking at maybe a bullish divergence, where a stock is making a low and then another low, but that RSI second low did not make a new low. It made a higher low. And I'm glad I thought about that, because that might even be another good example, Jay, of accumulation of a stock that hasn't gone. So there's different types of accumulation. Accumulation of momentum is going to look like this. Accumulation of bearish divergence. I think we can go to the Market Explorer that Michael built. Okay, so in the Market Explorer that Michael built, I think he's got some divergence. Let's see. There it is. Okay. RSI daily divergence long. So let's bring up my other chart, and we'll throw some We'll throw some RSI on here. Okay. Now we can start to look for divergent names. I've got that chart. I need this list. Okay. Anything on here should be diverging. Try to adjust this. Bear with. Oh, I lost the volume. I don't want the volume. Let me turn volume off. There we go. There's a clean chart now. Let's look at a couple names. Okay, I like this one. I would call this accumulation, MyGen. Low, lower low. Oversold, not oversold. That is what you call bullish divergence. So Jay, volume helps, especially if, I turned the volume off. I wanted you to imprint on this. The higher low and the RSI as it's making a lower low in price. And then let's look at the volume again. We'll put that back on. And we'll turn, oh, that works. That's even better. So yeah, pretty good spike in volume there as the divergence is being made. I think that's about the best answer I can give you, Jay. And as you can see, if you add that to your chart, you have the Market Explorer built by Michael that will give you that information. Jay, don't be sorry for the questions. This is why we're here. If I can't put together scans as well as I could, I'm perfectly happy to use my hour to help people be better traders, because I've been doing this 3 decades now. Literally. 1995 was my first trading account. Oh yeah, Andy's going to be here tomorrow, Jay. Barry is still here. He does his room. We just don't do the handoff anymore. Ironically, Barry just said, I can't tax my system with another platform live. So when he took himself off of StreamYard, it freed up his resources, and we're just doing it this way now. No, on the top right with details, I have seen like bars with red and green and some values. Okay, is that easy to set up? Yeah, that's called our, let's see if I can get that in here. Second, where would I do that? Probably in configure. Let's see. Can't remember which one it is. Volume today, I think, is one of them. It's basically a graphical indicator that kind of changes colors every time we double the normal shares columns. Thanks, Peppy. He's always on it. Yeah, it's only in columns. I don't think it's going to be on the single stock. Maybe it is. I can't remember. Single stock with position, and that's what it is. I knew there was something I didn't have. Position and range will show you. We could add that right now, and I'll show you. If I add that column, okay. Okay, it's not the volume. It's a little different. So think of the beginning of that green spot as neutral. If this was on lows, it would be all the way to the left in red. That's telling us, and it's giving us 100 value as well. The stock is exactly on highs. And as we look at MyGen for our accumulation divergence example, it is slamming into high. So it just kind of tells you where it is in the day. Visually, I don't use it. I can just see it on the chart what I need. But that's what that's all about. Okay, Charlie, if there is a way to create a watch list of different stock sectors and have an alert that lets you know about we don't have anything tied to TradeWave that is hard coded other than what Michael has built in the Market Explorer. So again, we can go to TradeWave and you've got 3 ideas. TradeWave buy daily, TradeWave buy 5 minutes. Let's look at the daily. I'm a daily guy. So I'm going to get rid of the indicator there. Okay, so we've got our TradeWave, and we can go through this one in the Market Explorer. And these are essentially looking for ideas. I guess 12/12, that's today. Oh, it would help if I turned it on, I guess. No? Why is that not coming through? I'm not seeing a lot of value in this one. Okay, well, in this one, perhaps you have a buy tag right here on an uptrending stock, that buy tag in the past. But currently, we don't really have a scan that says, hey, TradeWave just triggered by this. It's more of a secondary tool to help you, gauge the positions that you're in. All right. Okay, stops. Great question. Do you typically put stops in lowest low for this type of trading style? For the most part, it looks like I'm still in BBAI. This is an exact real-time example. I watch BBI open, and what I will never, ever, ever do is give them my shares in the form of a market stop order in the first 30 minutes, maybe even 45 minutes, for this particular reason alone. Then this candle right there becomes my signal candle. Yeah, I'm going to get stopped out as we speak. So I needed this to break through right there, and it didn't. Originally, I had it at the low. Just give it to lows, fine. If it rolls back over, get me out. But once it was denied right there and right there, I just said, there we go, I'm gone. I'm going to get stopped out right here. Let me see if it's still there. What's my stop? Well, I might have clicked it down to 63. I did. I went to 63. And the thought behind that is, well, why not new lows? Well, it looks at this point like it's got a date with new lows, and I'm just willing to just let it go because if I put it at new lows, it's still going to get me. So I'm just going ahead and probably just let it not be a good trade here. It had two chances it needed to go for me, and it didn't. There and there. So I have to just rip the band-aid off and say this one isn't working. And a lot of times for me, if I just look at this and go, oh, hell, get me out. Boom, boom, boom. That 2 cents, if I'd have just waited that 2 cents, I would have been happy because maybe it bounced. So bottom line is I like to use stops after the first 45 minutes have cleared out. If a stock wants to go back and roll over and test that low again midday, I don't want any part of it. Hope that helps. Catching up. Can I check IVAC? Of course. I don't know if you're long or thinking about getting long, but IVAC. Ooh. Okay, so news today for sure. Okay, they got some good news. But I want to show you something that has just really hit me hard lately. I have never, I shouldn't say never, I have rarely seen stocks in a downtrend have a good, nice, we call this a pro gap, just snapped the necks of the downtrend, and all of a sudden it's got a new vector. However, do not underestimate the power of the 200-day moving average. Okay, it got close, but what I've never, hardly ever seen is a stock take off like this and blast through the 200 and just keep going with impunity. It just doesn't happen. So you have to figure out what your trade is. Do I want to just take my scalp and get out at the 200 day and be happy? Or am I thinking this is the beginning of a new era? Well, then you're just going to have to resign yourself to the fact that you're going to get some of this. That's my opinion on that. Do you see a version of this setting up in Nikola? Yeah, that's a tough one, man. That I know that stock. NKO. Well, let's look at it. What's just the one that I had the chart? Oh, I closed that chart, didn't I? I don't like this. I don't like it. I don't have RSI on here. We could put it on real quick. Let's see what it looks like. Because I can't say definitively without looking at the RSI. So you're getting kind of a skipping. It's not really a, I mean, it is what it is. On a trade like this, you could look at this volume and say, okay, that was a lower low, but it didn't go lower here. So it's kind of the beginnings of something. It's pretty simple. All you have to do is just say, okay, if I like it, I like it. Well, currently it's getting hung up yet again in the 10 SMA. But what if it does go? Great, you're in it. If it doesn't go, that's your out. So sometimes you get these great risk reward levels where you're risking, 8 cents to make 80. So I find no fault with doing things like that. You just have to know where your out is. Where people get in trouble, and I did this my first year, is I fell in love with a company and it kept doing the stock like this and it kept going lower. And I said, well, I know the minute I get out, it's going to go up. So I can't get out. And it was just the dumbest thing ever. I learned real quick, don't get married to a stock. Wait for this chart to tell you what's up. There's a little uptick as we speak. 200 simple. I always just use the 200 simple. I really find no difference or any value in an EMA. It's just kind of a nuance. I think the argument's kind of a moot point. Simple works just fine for me. And I think a lot of the institutions do as well. The people who use EMAs, I think, are more like faster day traders. I think I agree, Jay. I think there might be something there. And the best part about it, like I said, is you've got a wonderful defined risk. You're going to risk 8 cents to make 80. It hurt us talking. I find no issue with that trade philosophy or that trade design, because your out is so easy. You just can't fall into the trap of not adhering to your out. That's where a lot of people do get in trouble. All right, guys. Again, I'm sick. I got not much voice left. I'm going to go for a couple more minutes, and then I've got to get ready for a meeting. But the hour goes fast when we're looking at things. Those, the ones that I showed you up here, they were suggested stocks from TradeWave. But again, I'll show you, this is the only thing. It's under New Market Explorer. You have to right click for strategies and then go to the bottom. So you can experiment with those. You can pull up the charts that pop up in there. You got daily, you got weekly, and you got 5-minute. And that's the only automated scan that's going to pull up something that might be interesting using TradeWave. Because other than that, it's just you and your own charts and how it looks to you. Maybe in the future there might be more, but it's just kind of an ancillary charting product for now. Still didn't get stopped out of that BBAI. Maybe it's going to be one of those cases where in a whim where I just hit market sell versus put a stop a couple cents lower and turn your head. Whatever happens, happens. It's like you can't blame yourself either way. If it happens, it didn't. If you're in, still great. But when I sell it manually and then it goes higher, that really pisses me off. All right, guys, I think this is a good place for me to wrap up, take a break. Being new, I'm not good with analysis. Thanks. Hey, keep coming by every day. Andy's going to be here tomorrow. He's going to give a lot of great information as well. And this doesn't happen overnight. You get a lot of smart people from other businesses that have built businesses, and they come into trading, and they get very frustrated because it's hard and they can't get leverage quickly. Just take things slow. Don't be in a hurry. Use the simulator when you can, and come to these live trading sessions when you can, and just learn as much as you can, as quickly as you can. All right, guys, my voice is gone. Thanks. I'm going to go ahead and sign out. See you later.